I today have another fun PowerPoint for you. And the topic is tax credits. So I created this PowerPoint at the very beginning of talking about this legislative session. It's designed a little bit more for folks that are less familiar with the IDA initiative. So this might be information that you already know, but hopefully everyone will get at least something new out of this. The essential focus is how does money flow through the initiative? And get to savers, and how do tax credits interact with that? So if we could save questions to the end, if anyone has questions, or you can drop them in the chat, that would be great because I won't be monitoring chats or hand raised. So here we go. Can everyone see the PowerPoint? Oregon tax credits. Okay, so Oregon tax credits, very brief overview. In Oregon, we have three different types of tax credits. One is a standard credit. Those credits can just be claimed up to the amount of the taxes you owe or your tax liability. Any extras won't be refunded to you. So these are credits like the Oregon Cultural Trust, or if you pay income tax in another state where you might have a residence. We also have carry forward credits. So carry forward credits will also not be refunded, but any amount that's more than the taxes you owe for a given year can be carried forward to another tax year. So the IDA Initiative Fund Tax Credit, which is the formal name for our tax credit, is a carry forward credit. The third type of credit is a refundable credit. So a refundable credit is what goes above and beyond what the taxes that you owe, and those can be refunded to you. For example, 529 college savings contributions. So that's a very brief summary of the types of tax credits in Oregon. So the Oregon Department of Revenue issues tax credits to individual taxpayers when they're claimed on a tax return. So if you've ever filed your state taxes, some credits can be claimed just by checking a box. Some you have to fill out a separate form, which is called the ORASC. So briefly, our regulatory and compliance framework, in other words, the laws that allow us to work with tax credits. So Oregon statute, here's the chapter and verse, 315, 271 to 272, funds individual development accounts with a tax credit not to exceed $7.5 million annually. But wait, record scratch. As Luke just said in the last session, a change was made that allows us to raise this year, once that legislation is signed, we'll be able to bump that up just a small amount. We'll be able to sell 7.7 million in tax credits for this tax year and 8 million in tax credits for years after that. So, Oregon Housing and Community Services, or OHCS, is the part of the state or the state agency that is tasked with administering the IDA initiative. OHCS contracts with neighborhood partnerships to sell the tax credits that fund IDAs and administer the IDA initiative with the proceeds that are raised from selling the tax credits. The Oregon Department of Revenue, again, issues the IDA tax credits to taxpayers when they claim them on their tax return. The Department of Revenue has an agreement between OHCS and neighborhood partnerships, which allows us, neighborhood partnerships, to market and manage IDA Initiative Fund tax credits. And then finally, as you all know, neighborhood partnerships contracts with statewide fiduciary organizations to carry out the IDA program to IDA savers. So that's it in a very brief nutshell, the laws and agreements that allow us to do what we do. So who are the stakeholders? We have donors or individual taxpayers. We have neighborhood partnerships. We have fiduciary organizations. And then we have other partners, and I'll go through those just briefly, one at a time. So what is the donor experience? How does it work from the perspective of a donor? So an individual taxpayer makes a donation to the IDA Initiative Fund through neighborhood partnerships. And this is the same way that donors donate to other nonprofit organizations. Same thing. They'll write us a check, they'll give us a credit card payment, they'll donate shares of stock to us by transferring those shares to our brokerage account. So Neighborhood Partnerships sells tax credits until April 15th, and that was also a recent change in the law that we don't have to stop selling tax credits each year on December 31st. Instead, we can sell until April 15th or up to 7.5 million. Again, this has not been updated given the recent legislative changes, so that will change to 7.7 million. So, or up to 7.7 million, whichever comes first. So for example, this tax year is, for our purposes, January 1st, 2025 to April 15th, 2026. So Neighborhood Partnership sends a letter acknowledging that the taxpayer has purchased a tax credit valued at 90% of the donation. Just a pretty standard, if you've ever donated to a nonprofit, it's the same type of letter. One of the differences is there's an attachment to our letter from the state that says, here is how you claim the tax credit. So by offering a 90% tax credit, Neighborhood Partnerships is able to raise $8.3 million for the IDA initiative. So in other words, 90% of that 8.3 million equals the $7.5 million cap that we have. Once that is raised to 7.7 million, we'll be able to raise, if we keep the 90% tax credit rate, we'll be able to raise $8.5 million. However, let's talk about that for a minute. Again, in the legislation, which allows us to sell the tax credit, the language is that we are able to offer no more than a 90% tax credit. However, we are able to offer less of a tax credit. So we can talk a little bit more about this at the end if it's not clear, but essentially if we lower our tax credit at all, we will be able to raise more money for the IDA initiative. So what we are doing now internally at NP is starting to discuss, and we have been discussing, but kicking up our discussions or discussing with more urgency, do we need to change our tax credit rate? Given that the cap was not raised by much, allowing us to sell more tax credits, what are our options for raising more revenue? One of those options is to lower the tax credit rate. So among other things, we are going to be having some focus groups with donors, asking how low can we lower the tax credit rate and you would still be interested in purchasing them. So just so you all know, those conversations are going on. And there is a possibility that we will lower that tax credit rate to allow us to raise more revenue. More to come on that. So the next step, the taxpayer submits that schedule ORASC with a particular code. The IDA code is 852. They include that with their state tax return. The Department of Revenue confirms that donor data and approves the tax credit. So the value of the tax credit is subtracted from the taxpayer's taxes owed. If the credit is more than what the taxpayer owes, again, the taxpayer can roll it over, can carry it forward to another year. So for example, again, talking about that 90% tax credit rate that we currently offer, if a donor donates $1,000 to the initiative, they get a tax credit of $900. So again, the taxpayer can carry forward their tax credit for 3 years after donating. If they still haven't used it after those 3 years, the credit is not available for them to use anymore. Okay, so neighborhood partnerships, what's our role in the tax credit funding? So we every year issue a tax credit marketing plan, laying out how we are going to get the tax credits sold. Neighborhood partnerships processes and tracks IDA donations as tax credit sales. As stewards of public funds, Neighborhood Partnerships submits financial reports to OHCS monthly for review. So because we are taking in revenues from selling tax credits and holding those funds, we want to make sure that we know where they are at any given time. So we report that to OHCS monthly in a number of different reports. So a little bit more detail on that. So Neighborhood Partnerships accepts and holds the revenues from IDA tax credit sales, which funds the operation of the initiative. NP doesn't request a payment for services from the state. Instead, NP requests a transfer of funds from the pool of tax credit revenue to reimburse for monthly expenses. So I'm sure many of you are familiar with contracting with the state for other programs in which, you know, you perform the work and then request that the state sends a payment for that work. NP is in the unique position where we already hold the money. So essentially, we are just asking for permission when we send our monthly financial reports for just a transfer of those funds for that month's expenses. So NP also reports donor data to the Oregon Department of Revenue every year at the end of the tax year. And we facilitate communication between the donor and the Department of Revenue if issues arise. If there's ever a problem with a donor accessing their tax credit, I'll act as the go-between to get that figured out. So annually, NP funds fiduciary organizations from the amount raised through tax credit sales for the previous year, minus NP's contracted amount to run the program. So a little more specific on that. So in general, every year's tax credit revenue funds one IDA grant year. So the pool of funds available to grant is equal to the amount raised by our tax credit sales, minus the amount budgeted by Neighborhood Partnerships to administer the IDA initiative. So for our contract with OHCS. So for example, 2024 tax credit revenue funds the 2025 IDA program year that we're writing up contracts for right now. Occasionally, we'll have little bits of funding here and there that we can add to that pool, but in general, it's what we've sold the year before in tax credits or for tax credit sales. Okay, so fiduciary organizations. So again, annually NP funds FOs through either an RFP or a contract amendment process. Tax credit funds are granted out to FOs as program and admin funds or match funding. I think you're all pretty familiar with that. So each IDA contract year, FOs are paid program and admin funds immediately and are paid match funds twice a year. Other than the portion of match funds paid to FOs twice a year, so in those match cash drawdowns, NP holds and manages the revenues from tax credit sales. Just emphasizing that because, again, that is a pretty unique business model where an organization holds the revenues from tax credit sales to fund an initiative like the IDA initiative. In fact, I believe we are currently the only organization in the country that operates this way. So FOs, or network partner staff, move savers through the IDA program, spending program and admin funds internally and paying out match funds to savers. Again, you're very familiar with that. FOs provide neighborhood partnerships with quarterly fiscal reports and bank reconciliations at least annually to ensure good management of public funds. Again, because we're holding them, we need to be able to account for where they are at any given time. So this needs to be updated to include last year, but between 2019 and 2023, FOs and network partners paid an average of $7 million per year to IDA savers toward the asset of their choice. Savers were paid $8.2 million in match funds raised through the sale of tax credits in 2023. So other partners, who else is involved in the initiative? Every program year, roughly 1,000 IDA savers complete the IDA program and receive full match toward the asset of their choice. In 2023, 1,160 savers completed the program. IDA savers are NP's most important partners. So NP also provides resources for FO partner providers and engages financial education trainers, financial coaching trainers, and other subject matter experts. Also important partners. NP invests centrally held funds guided by a conservative investment policy and in partnership with diverse financial partners, including Oregon CDFIs, or Community Development Financial Institutions. So we do have an investment portfolio. We make an effort, and we're increasing our efforts in partnering with financial institutions that align with our mission, that walk the talk, share our values and show it. So we can talk also more about that at a later date, how our investment portfolio works. So as you also may be familiar with, the interest earned on our investment portfolio is paid out to each FO annually, once annually. And that's calculated on the amount of match funds that we hold for each FO. So other than what's paid out twice a year in those drawdowns, the chunk that we hold is earning interest, and that's the interest that we pass through to you once a year. Excuse me. NP is responsible for regular reporting and communication with the Department of Revenue regarding donor data and with OHCS on the management of centrally held funds. So again, important partners for us. So just viewed a different way as to how the money flows, we've got donors flowing money into neighborhood partnerships, granting out to fiduciary organizations that get match funds to savers. And that's the flow of the tax credit dollars. So that is it in a nutshell.